Welcome to Alpha Insights. I'm Kristen. We've got Matt here to walk us through why Alibaba is back on investors' radar. Quick note, markets are closed today. It's the long weekend. And if you want to ask us questions as we go, head to stockalpha.ai.
Thanks, Kristen. Great to be here. Alibaba sits at the crossroads of China e-commerce, cloud computing, and a big push into generative AI. It's a mix of steady cash generation and optionality if the AI and logistics bets pay off.
Give us the short version for listeners who want the thesis in one line.
Sure, long term, I see Alibaba as a cash-rich platform company with durable marketplace advantages, a growing cloud and AI revenue, and explicit investments in logistics automation. The market is pricing it conservatively, so there looks to be upside if execution holds.
Walk me through what Alibaba actually owns and why that matters.
At its core are the big consumer marketplaces, Taobao and Tmall, where merchants and buyers interact. That feeds advertising and transaction take rates. On the enterprise side, there's Alibaba Cloud, which is scaling AI and cloud services. Kniao handles logistics partnerships. Put them together and you get network effects, data advantages, and scale in infrastructure, all of which are hard for smaller rivals to replicate.
We keep hearing about this Quen AI and a logistics investment. What are those moves?
Two concrete actions to watch. First, Alibaba committed about 3 billion yuan to promote and commercialize its Quen AI product, trying to push generative AI across consumer apps and enterprise services. Second, its Robovan unit is putting roughly $2 billion into Zelos technology to boost logistics automation. Both are spinning to create new revenue engines or lower fulfillment costs, but they require time and good execution to pay off.
How does that square with the financial picture? Is the company stretched to make those bets?
Not really. Alibaba has a strong balance sheet, lots of cash relative to debt, and steady free cash flow. That gives management the flexibility to invest in AI and logistics without having to raise expensive capital. The current ratio suggests near-term liquidity is fine, and they continue to return some capital to shareholders through dividends and buybacks.
Valuation. I know listeners want to know if it's cheap or not.
On a simple price to earnings basis, it's trading around 19 times trailing earnings, which is below peers in some parts of the cloud industry and below its own peak multiples. A blended fair value estimate from analysts sits roughly in the $180 to $210 range with a mean target near $195. That's about 20% upside from where it was heading into the long weekend at roughly $162.
So, what are the main upside and downside scenarios?
Upside comes if Quen AI monetizes faster than expected and Alibaba's cloud business lifts margins and average revenue per user in advertising and commerce. Logistics automation reducing fulfillment costs would be another big plus. The bull target some analysts use is as high as $250 if everything accelerates. On the downside, regulatory or geopolitical shocks, slower than expected AI monetization, or intensified competition from rivals like JD and PDD could push valuation materially lower. Some bear scenarios put a target near $130.
Any upcoming events investors should circle on their calendars?
Yes, the next big number is the earnings report on February 19th, released before the market opens. Investors will be listening for revenue cadence, cloud, and AI revenue detail, and management commentary on timelines for Quen and the Zelos investment. Given headline sensitivity for China names, that report could move sentiment significantly.
Practical advice. What should long term investors do? And what about traders?
For long-term investors, consider accumulating on weakness and use dollar cost averaging. Alibaba is a multi-year growth and transformation story. For short-term traders, treat the February 19th earnings as an event. Use tight stops or options hedges because headlines can create swings. And always size positions to account for China-specific regulatory and macro risks.
Before we go, give listeners 3 quick takeaways they can remember.
1. Alibaba combines a dominant e-commerce ecosystem with growing cloud and AI optionality. 2. The balance sheet is a real strength which lets the company fund Quinn AI and logistics without immediate financing stress. 3. Valuation looks reasonable relative to upside, but execution and macro or regulatory shocks are the key risks to watch.
Great! And if you want to dive deeper or ask us a question about Alibaba or any other name, go to stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for listening. Matt, appreciate you breaking that down.
Always a pleasure, Kristen. Enjoy the long weekend, everyone.